price is on the defensive, this year, play offense and get back to the fundamentals. For over 40 years, Advanced Trading's non-predictive approach has helped farmers secure and extend profits, regardless of market trends. Let Advanced Trading help you take control of your balance sheet by creating a marketing strategy to protect your operation and reduce market risk. Our team is positioned to help you make the most of 2024. You never stop working, and neither do we.
Welcome. Thanks for joining us. I'm Nate Durako, joined by Brian Basting and Michael Reginelli, and we're going to try to digest a little bit of the USDA WASDE report today. As I was walking away, corn, new crop up 5, beans down 13 and old, down a couple cents in new crop. But the bearish tone today came from the wheat side. Brian, what did we see on the USDA report about U.S. and global wheat dynamic?
A shocker, if you will, Nate. We're looking at the crop size in the northern plains. USDA really pegged in, or penciled in, I should say, record yield for North Dakota, 56 bushels on other spring. So that is unprecedented. We're looking at 75% good to excellent crop ratings here as we approach the middle of July. That certainly caught the trade off guard and really gave some comfort to the balance sheet when you look at 24-25. Nate, the USDA also bumped up the hard red winter wheat crop from what it was in June. June
pretty
was
big yield changes.
Pretty big yield changes. Kansas, Oklahoma, higher yields. Nebraska, higher yields. So we went from 726 on the hard red winter wheat crop to 763. Now there was virtually no change in the soft wheat crop from last month. So when you add all that together, a 2 billion bushel all wheat crop, Nate, the trade was not even close to that for an average trade guess. So when you looked at the supply side of the equation, the market was overwhelmed today with supply side. Now, if we look at the world situation, there's not a lot of changes there. No change in the Black Sea in terms of Russia or Ukraine, in terms of production or exports compared to last month. USDA did tweak Canada's production up 1 million tons, kind of in line with that North Dakota estimate. Obviously, the spring wheat in Canada looks really good right now, too. And they increased Canada's exports by 500,000 tons. Other than that, they did decrease Europe's crop, the EU, by 500,000 tons. And they took
some quality issues there.
Yeah, that's something to keep an eye on. A little bit of a wild card here. They're harvesting the wheat, or they will harvest the wheat in France and Germany between now and the middle of August, let's say. So that's something that's still a little bit of a wild card, and there's some wet forecasts out there to watch. But all that took a back seat, Nate, to the higher than expected crop estimates here in the U.S. And our balance sheets have really got a lot more comfortable.
So given that carry out comfortable level, obviously we got to harvest the spring wheat crop still, but like you highlighted, 14% above last year, so conditions look good. We'll do a tour up there in a couple of weeks here from ATI. Comfortable balance sheets, where do we look like in world competition? And maybe just another side, kind of what are we still watching? Russia changes still potentially, or kind of what's on the forward curve here?
I think that the balance sheet for hard red winter feels heavier than last year for one main reason. The crop size is getting bigger, and I think it could still nudge up a little bit higher from what the USDA has it. USDA has the hard red winter carry out at 360, Nate, for this 24-25 crop year. Last year was 280. So we're looking at a really 80 million bushel increase in the carry out for HRW for this 24-25 year. Now, something that flew under the radar a little bit, but was brought to my attention this morning, was the soft red winter stocks to use ratio has nudged up above 40%. It's at 40.1%, Nate. That's SRW ending stocks for this year versus usage. Nate, the last time we had that was 3 consecutive years.
18, 19.
16, 17, 17, 18, as Michael said, 18, 19. And I'll defer to Michael on what that environment was like in terms of basis and spreads. But the USDA told us today that they don't believe we're going to feed a lot of SRW here for this year. Only 60 million bushels. Last year we fed 91 million bushels. So you're down a
Corn
third.
relationship last year.
There you go.
You can look at the spread between the two, and some might argue, we will see higher inclusions, and I get that. It's probably, if we're going to generate it on the price break, it's more export oriented, given that you still got a $1.50 spread between corn and wheat today, even with the wheat board getting slammed. So.
Is the quality so far? I mean, moving along with SRW harvest.
Yeah, in
a few
general. I mean,
pockets,
there's
but
yeah,
not enough to drive
some
a
of the
huge
northern
shift.
tier still has, maybe 20-30% left. For the most part, it's done at this point. I would say in general, quality was pretty good. At least in the Ohio, Indiana, Southern Michigan, you can get cute and find pockets of maybe sub quality. There's spots in Illinois that maybe it was a little less than what they would have liked, but in general, I think we got a pretty good quality crop out there.
Yeah. So, just quick, I'd maybe comment on the spreads. Probably just be a little patient from a commercial side on locking and carry. We were a little weaker today.
Yep.
I think wheat still owns space in the east.
Wheat still owns space in the east.
Okay.
Yeah, wheat still owns space. A basis in every major markets, at least double digits under delivery at the moment. Mills have pretty good coverage. At least they're set.
Yeah.
Maybe beyond that.
Probably got to pull away from carry a little bit, but I don't think it. I guess maybe summarize comment. I don't think it's an urgency from a supply and demand picture to try to chase. You can be a little patient on the carry, but if you're
Right.
putting it away, make sure you're got some targets in to see a return.
Right.
Okay. Shifting a little bit to corn and beans, Michael, maybe just a rundown what we saw, kind of changes on the balance sheets.
Yeah.
Old crop first.
Yeah. It's the old crop corn was probably what got a lot of attention on that side of things. I don't think anybody in the market had the carryout dropping to 187.
Yeah.
The low end of the range was 197. So I mean that's 100 million bushels lower than the low end of the trade estimate for old crop. Big two cuts, 75 million off feed, 75 million off exports. We've been, Brian can attest, 30 to 40 million higher on exports than the USDA. So
Yes.
An uptick in exports, maybe a little defendable. 75 is pretty aggressive. The
A little bit of
feed,
a surprise there.
the feed, I think definitely caught me off guard. I think caught most off guard. It doesn't seem like the inclusion rates have, or up to this point, would have justified an increase like that. So I think that's where there's some questions and some skepticism, reasonable skepticism in my mind, is creeping in. But either way, 150 or 145 net gets cut out of old crop. That's obviously going to carry into new crop, tighten up new crop balance sheets a little bit as we try to roll that forward. Even then, at a 187, we're still at a 12.5 to 13% on stocks to use. It's still comfortable. USDA told us June 30th we have a lot of old crop corn still on the farm to move. We're running out of time. The calendar is going to eventually converge to new crop here at some point in time.
Quicker and quicker.
Quicker and quicker. And, out there the crop looks pretty good for the most part, and it looks somewhat advanced. So no huge cause for concern. If anything, the September-December spread actually continued to push wider despite the fact that we tightened up old crop carryout and despite the fact that domestic basis continues to be high as they try to source bushels. But it's more of a pipeline issue than an actual lack of supply issue in my mind at the moment.
Yeah, and it sounds like we're seeing a little more interest from the producer to move that last 20-30% of old crop in pockets, as I think they're looking at their backyard and conditions are very favorable across much of the
They're going to want
US.
their bin space.
Yeah, and not saying we can't see some adjustments continue from that crop size, but right now, as we get closer and closer to the new crop, it seems like we're getting more comfortable with the balance sheet.
For sure.
So on that 24-25,
Yeah.
sorry to interrupt there, but we adopted the June 30th acreage, and just to kind of recap, we know that there still could be some reduction in that harvested acre number, right? So those were the intended acre planted. We know there's going to be some plant fail or lower harvested acres in parts of Iowa and Minnesota that got flooded out. But as we account for these favorable conditions, and feels like even a forward weather forecast that's pretty conducive to corn yields.
Just got a lot of rain.
I've heard a couple comments that, using these high trends, these 181, 182, trend technically means kind of that average weather conditions. If we have above average or more favorable weather conditions, we could see a higher yield. And I think that's important to account for as producers are watching these prices and the managed money stays short. But as we're getting more comfortable with the new crop balance sheet, maybe just a comment on the spread relationship and maybe what we're looking at on new crop corn and bean spreads.
Sure, yeah, and you don't need to apologize for cutting me off. It's your show, buddy. I'm just excited to be here. So we're the one thing I'd note is, they didn't touch yield today. Corn and beans, they left them unchanged. I think that was mostly expected. You know,
Yeah.
if we're gonna see an adjustment to yield, I would think it'd be next month
Yep.
when we get the survey data in August.
First surveyed.
Yeah, they did bump corn acres up though, 1.5, which bolstered supply a little bit too. So that's something that we got to kind of keep an eye on because that'll be embedded. And if you look at the conditions, it would suggest that corn yields nationally could be trending possibly higher than USDA here. So obviously the tighter carry-in is impacting new crop balance sheets. It's basically pushing a rope at this point. I mean, they took it down net 5 million bushels. We're still hovering around a 2.1 on new crop corn. Feels comfortable, feels ample. No big cause for concern as far as that goes, right?
Yeah.
So I think that maybe was the anchor to some degree. When people saw the old crop number, my guess is there was a contingency out there that thought this market would rip more than it was, given that especially that the funds are record short for this time of year.
Good point.
On corn, and it didn't. We're up a nickel on the close ish, but not maybe to the degree some would argue for. But the new crop didn't really, maybe held that back to some degree. And then also, as Brian noted, I think wheat probably is acting as an anchor as it moves lower a little bit too. So on the spread side of things, similar bias to what we have seen. Looks like a good crop coming at us. It looks, if anything, maybe a touch early. Silking, what was it, 22% on Monday, 24%, it's 10% higher than average. I think we'll see some early corn available.
Yeah.
And, as long as that's the case and the pipeline gets filled, the question, as it's been all year and probably will continue to be, is when the farmer moves bushels, old crop and new crop, as far as the impact on basis and spreads. But fundamentally, there's probably a justification for some additional pressure on the spread side.
Probably a be patient, same comment as wheat, like you said, just watching this favorable carry develop and not feeling a huge risk in the production outlook that, feels like, or a demand change that feels like we really need to shift that mindset to go chase anything today. And part of that, I think, shifting back to Brian, kind of comes from the South American outlook. So we saw CONAB numbers yesterday continue to ratchet higher. Brazil harvest pace is ahead of normal. I'm trying to think back. I think the low in the CONAB was 112 million metric ton range, and maybe some trade estimates below that, 110 I remember seeing at one point. USDA unchanged today for Brazil, 122, took Argentina down 1. So we still have a spread between CONAB and USDA, but maybe the trade feeling more confident that CONAB's coming up a little closer to that. What kind of additional downside risk or potential USDA forward look on the Brazil crop do you think we could see here?
The Brazil crop this year, Nate, as you said, has been rapidly being harvested in the northern state, the biggest state, the largest state of Mato Grosso, largest state, and they are roughly 80% done would be my guess this week. And that is well above the average. And as you go further south, the harvest will go into August, and that'll include the states of Mato Grosso do Sul, Paraná. There's a little bit of uncertainty regarding the yields in those southern states. The yields in Mato Grosso, Nate, outstanding for the most part. So that's where I think when we're seeing CONAB boost up their number relative to USDA. I think USDA is going to wait and see what those southern states are.
Or some of that late rain.
Some of that late, and the dry season did kick in for the north, but the crop was already pollinated. It was in great shape. The south has had a few more bumps along the way. The southern states have a few more bumpy issues with weather. So I think for the moment, the trade thinks that maybe those southern states won't quite make it to the USDA number, but it's premature. We're just not near as far along in the harvest in those southern states. What I'd remind the viewers today, though, Nate, is all those bushels that are coming out from Brazil, they're coming out early, for example, from Mato Grosso, are going to compete with U.S. bushels as we move into this new crop marketing year, which is only 6 weeks away now. So just a reminder that the crop size in Brazil is going to be smaller than last year, but Argentina's crop, which you mentioned there too, is going to be much bigger than last year. Now, the debate about Argentina is USDA only took it down 1 million tons today. Some of the private firms are 5 million tons below that, 47 million tons versus 52 from USDA. The concern about Argentina from a production standpoint is this last third of the harvest was hammered by that corn stunt disease. And are we going to see that? USDA historically is conservative. Are we going to see that number come down maybe in August or September? Still, I'd remind the viewers, even if you add together a little bit of a reduction in Argentina and maybe a tiny reduction in Brazil from that current number, the combined output from the two is pretty close to where it was last year.
Yeah.
Combined output from Brazil and Argentina, so that means export competition. One wild card I'd mentioned, Nate, to remind the viewers, Ukraine. It's hot and dry in parts of Ukraine right now.
Good point.
And that's something to keep an eye on, because I don't believe USDA tweaked the Ukraine estimate today at all. They left it at 27.7 million tons Ukraine corn. That's something to keep an eye on, because that could be a wild card. But other than that, I just want to tag along one comment that you made earlier in terms of the old crop. That is, just from a risk management standpoint, strongly encourage the viewers to remain flexible on these markets. Get a floor in place, but leave that upside open, but get control of those old crop bushels. Because what you said a moment ago struck me too, Nate, in terms of some of these models projecting new crop corn yields and the fact that the new crop may be coming on earlier than expected.
Yeah.
We could have some corn hitting around Labor Day or earlier in the South. Point being is that the market will know that, and if we start to look at those big yield numbers being a reality, the end of the marketing year for old crop could get a little more negative, but not a prediction, but just get control of those old crop bushels.
Yeah, one more wild card just for fun. Brian noted, Brazil likely cutting into U.S. export corn competition here. That's likely going to happen, but also the pacing of Brazilian farmer selling is they're up against some similar challenges that the U.S. is at the moment. They've been reluctant sellers, fairly tight holders up to this point, at least a little more than normal.
Yeah.
Which can constrict their pipeline to some degree, creating elevated
Currency
basis
favoring
values.
them a little bit.
Yeah,
but,
sure. Yeah.
But yeah, still behind pace in
Right.
general. And that's just, I think, a theme we see in these transition years off high prices. And we've talked in our office that Central Illinois producer point in time today is facing one of the larger losses per acre.
Largest,
I think it is too. And so, I think we can freeze up in those type of environments and kind of let hope take over, and sometimes wait too long to let that panic set in. And Brian, you said it, I think the strength of the key is trying to market through that and use opportunities or marketing tools that give producers some upside in this thing while limiting the floor. Because while $4 seems like, can we go a lot lower? Funds are record short. Maybe they even up a little bit of that position and could see a little bit of a bump here. But it feels like the production outlook is weighing heavy on these markets here as we get into kind of the final stretches. And that's not to say that something couldn't change. Maybe the USDA export outlook includes some of that downside bias in South America in their final numbers. But either way, it still feels like a pretty comfortable balance sheet going into new crop. So old crop, new crop window narrowing. Michael, you highlighted managed money. We've talked a little bit.
Sure.
New crop harvest timing we've hit on. Maybe just a comment from both of you guys. Michael first, what are some tools farmers could look at for old crop today? And really, I think the importance starting to shift to, let's not forget about new crop that is undermarketed pretty heavily today as well, for this point in time.
Yeah, I think undermarketed is a pretty common theme across space. I think if you take a poll of commercial elevators out there, their ownership levels are certainly down from normal, irrespective of what market you're operating in. So I think that's common, but you're right. I mean, from a tool standpoint, I think Brian just said it, there's been a lot of, obviously this market's gotten beat up pretty good. That doesn't mean that there's not more downside risk in it. The fact that we were 100 million less on old crop corn today, which was a pretty shocking number.
Yeah.
And the funds are as short as they are, and we couldn't get the energy and inertia to bump this thing into double digits or more. It's kind of stunning to me. So I think, protect downside, set floors. If you're selling cash, it doesn't mean that you're throwing in the towel. You can maintain upside flexibility via calls, call spreads, buy insurance, just in case, this thing does turn around, volatility is low. That's what I would be looking at if I was on that side of the ledger. And we are going to see new crop fast. I mean, Louisiana's going to have new crop corn by late next week. there are some problem areas too out there. So like we can't just skim over them. Like the southeast crop is in very tough shape. You know, good to excellent conditions are 12, 14 in North Carolina, and they were 70 plus a month ago. I mean, there is some stress, there are some challenges out there, but in general, the crop does look good. You know, even if we carry in less old crop to new crop, unless something really changes in a tangible way that's going to tighten fundamentals dramatically, it seems like we could see some pressure. And honestly, to some degree, same thing on the beans. You know, we lost 400,000 bean acres today, but the yield held steady. We'll see what that does next month. Based on conditions, I wouldn't expect it to go down off 52. If anything, maybe touch higher. It feels pretty well priced.
435 carry out or
435
so
carry out. That was a little bit of a surprise too. I didn't get into beans too much earlier, but you know, in general, I think most thought the carry out would come down a little bit. It came down more than expected, but it's still a healthy balance sheet. You know, we're above 10% on our stocks to use. It'd be the first time in 4 or 5 years that we would have seen that if that comes to fruition. So, you know, the pressure on beans feels, you know, justified to some degree. You know, we'll have to watch acres, we'll have to watch yield, and we'll have to watch demand to see if China ever shows up and starts buying new crop in a meaningful way.
Saw a flash of beans this week.
We saw
There's
one.
Positive,
we got one. Yeah.
Put their toe in the water.
Yeah.
Dipping their toe
Dipping
in
their
low
toe in the
prices.
water.
What
but
level
I mean,
do they rebuild stocks?
Right. I mean, they're historically underbought, you know, compared to the U.S. looking into the fall here.
Yeah.
So we got to find demand. And that's the market. If we can't do it quickly, then prices go into demand-seeking mode.
Yeah.
Right. So kind of the same story on beans as corn right now.
I just add that Nate and Michael did a terrific job on the old crop, especially highlighting some things there, and the new crop too on beans. One thing that we're starting to pick up, Nate, on new crop corn is that producers are contending that with prices this low, December corn just above $4 a bushel, you're not too far from quote unquote crop insurance protection. I believe if you took, my math was right, if you took 85% protection on your APH, 396 is your quote-unquote floor. There's one fly in that ointment, Nate, that I'd remind the viewers of. That's on your APH bushels. If you start to raise, or if you do raise above your APH,
good crop out
5%,
there.
10%, you do not get that 396 floor.
Right.
You'll get a lower floor. I think I did the quick and dirty math. It was like either 5 or 10% above your APH knocks down that 396 floor 20 cents. So the key message there is continue to manage price movement. Avoid price prediction. Avoid saying this market can't go any lower.
Right.
You know, just
Good point.
manage price movement. I think that's the key thing that I would emphasize going forward. As it's been a tremendous environment for options, to roll down the options, for example, continue to manage. And remember that if you raise above your APH, you don't have as much protection as you think you do.
Don't leave that blank and just assume that's your marketing plan. Well, appreciate the time today, guys, and follow ATI YouTube channel for more information. Thanks.
Welcome to Advanced Trading. Join the community of thousands of subscribers for access to industry-leading risk advisors, insightful research, and engaging live streams. We are your go-to channel for the latest grain market and livestock analysis. Subscribe now.